It's time to do business. Welcome to Business Incorporated. 25 minutes what we have to give you updates from the world of business. And here's what we've prepared for you. Uganda has gotten 12.28 billion loan. And SA Port gets upgrade. Oil slums around the world. Peace brings a reduction in the price of oil prices. Welcome to the program. I'm Amy John Mekwa. This is Business Incorporated. We start from the global oil space. Prices edged up again after a sharp plunge in the previous session, as U.S. planned to purchase oil for the strategic petroleum reserve provided support, while investors remain focused on developments in the Middle East. So we know we've been enjoying a breeze, seeing the drop in the price of oil, but it's time to stock up after all that's been taken out, and that's what we're seeing. So Brent, we see, is down 1.64% at $79.75. But WTI, which is the focus of the United States, since they're stocking up, we see that on the rise at this time, $77 after it gained 0.52. Both contracts tumbled 6% earlier today, hitting their lowest since October 1 after Israel's retaliatory strike on Iran at the weekend bypassed Tehran's oil infrastructure. And so, of course, it's not all set yet, but it seems we're on the path of peace. And then, we look at what's going on with gas. And we saw gas, in spite of the drop in the price of oil, it's still on the rise. And so it's 2.63% up at $3.31. That's for natural gas. And then moving on to metals, gold rebounded earlier today, set to end a 3-session losing streak, supported by a drop in Brent and on positive progress in Iran-US talks, even as the Federal Reserve's hawkish stance is keeping investors on edge. So see what has happened in the metals market. Spot gold is down 0.53%, $4,222.50. Spot silver is on the flip side, 0.35%, $66.55. Platinum 1.47%, almost 1%, 1.5% down for platinum, $1,682.20. Almost 1% drop is what we see for palladium, 1,277, and copper is also down almost 1.5%. And of course, we know the drivers, what's going on within the US and Iran and the Straits of Hormuz. Away from the metals market, Uganda has received a major boost to its development ambitions after the Islamic Development Bank approved 12.28 billion rand loan facility for the East African nation. The financing is expected to support key infrastructure and development projects aimed at enhancing economic growth, improving public services, and strengthening regional connectivity. The approval comes as many African countries continue to seek concessional financing to bridge infrastructure gaps, spur industrialization, and support long-term economic transformation amid tightening global financial conditions. And South Africa port sector is set for a major shake-up following the signing of a new terminal operator agreement by the country's Ports Authority. South Africa's Ports Authority, TNPA, has finalized all 11 terminal operator agreements with fuel and chemical handlers at the Island View complex. The deals aimed at attracting private sector investment and expertise form part of broader efforts to improve efficiency, ease congestion, and modernize port infrastructure. The move comes as South Africa seeks to strengthen its logistics network, boost trade competitiveness, and address long-standing operational challenges that have weighed on economic growth. Back here in Nigeria, we did see our foreign reserve hit a 17-year high. Congratulations to Nigeria. However, let's note that that's the gross for it and not the net. Do we have obligations that can bring them down? can that be sustained? Now, let's have joining us to discuss this the head of research at Sterling Asset Management, Mr. Patrick Ejemudia, here in the studio. Mr. Ejemudia, good afternoon. Should I say congratulations to you? Our foreign reserve is going up.
Up to 51 billion US dollars.
51.
And like we said, it's about
17-year high.
Yeah, the last time was around 2009.
Let's clap for this administration.
No, it's something to celebrate, because that is one reason why the FX has been relatively stable.
Yeah, that's the value of the Naira.
Yeah, exactly.
Yeah, so but can we say that's over? Because a lot of this is connected to the price of oil. And now that peace is coming between Iran and the United States, I mean, we don't think that extra funds or revenue will be coming in.
Okay, so again, in addition to that, the oil price and that, even though oil price is coming down, we are seeing some level of improvement in oil production. Yet we've not hit our budget in terms of what we put
target,
in assumption.
The OPEC target, 1.5.
No, we passed OPEC target around 1.7. But we've not hit what the assumption in the
real
budget.
One, because you have,
but even at that,
you have the condescent.
Yeah, so it's around 1.5. It's around 1.5. Okay. So we are still around the OPEC target. But we've not hit the budget assumption that we put when we which around 2 million barrels per day. So that we are still off target again in that. But in addition to that, even if oil prices come down, I think the major factor again that is driving it is also the various reforms that has been done by the current CBN governor. So you see that has kind of controlled capital inflow. Capital inflow from the Q1 data went up to around 10 billion US dollars. Even though it's driven by portfolio investment, we have also seen the structure.
Which is a risk also.
Yes, but we're also seeing the structure changing. The structure is now moving from traditional equity and money market instrument, and is moving towards bond. And that bonds give some level of investment confidence. And of course, if bond investment continues to increase, the overall effect is going to trickle down to us having a kind of increased FDI. So that can again lead to FDI increase. So we are seeing that also playing some level of. Then we look at trade. The policy too has also helped us to control trade. To a large extent, we see our trade coming up to about 34 trillion naira, which is upwards of about 7 trillion. So that has also helped us. So in addition to that, we are seeing what the student. We're also seeing the diaspora remittance. The one that we might not want to be talking about is the borrowing that is also increased.
Yeah, we don't want to talk about that. But I mean, when you talk about the CBN, we know that this administration, the CBN, did bring changes to the IMTOs and all of that. Yeah, and as you mentioned, the diaspora. So all of this is adding up. So can we say of a truth? I know this is our gross, not our net.
Yes, okay.
But can we say of a truth? We are stable now when it comes to our reserves.
Yeah, so I think what will determine that is the difference between the gross and the net. If the difference is not too large, it means there's still some form of stability.
Because we don't have an idea of our obligations.
Yeah, we don't, exactly. So, but the last time we saw the difference, the net, it was around 34 billion US dollars.
Yes.
Yeah, so if we look at that and we take it away from, the 51 billion dollars that we currently have, so there's a difference of around 15 or 16 billion. So that difference is not much, and that is part of what is also driving the confidence that we are seeing in terms of the effects.
Okay, so we can say this is one obvious gain from the reforms, That's what I hear you say. Yeah. But Nigerians will say, an average Nigerian, what's my business? How does it concern the man on the street?
So I think the major issue, I think that's another major issue. The major issue is about the duration of which these reforms are going to stay. If exchange rate is kind of stable for a while and business can plan with it, then we can see business grow, then we can see employment, then we can see that touching the man on the street. If all of this reform, if business is growing, we then expect that to drive GDP to grow. And if GDP grow up to the level that we are envisaging it to grow, which is about close to 10 double-digit growth, then we can then begin to see.
Can we finish the 5? I think we're still projecting 4.1.
4.5, yeah, 4.1, 4.5, exactly. So, but again, we need those stability in terms of the reform, then some level of growth before we can then begin to, the good thing, like we started this discussion with, is to say we are seeing some form of positive results. The stability of it is what we'll now be looking out for. From that stability, it will be touching the ordinary.
Yeah, but Dr. James, I know it's funny how I remember when the FX policy was coming and then the Naira was dropping, and then everywhere you go, everything they connected to the FX, to say, oh, it's because the dollar is there. Exactly. But now there's the stability, and it seems difficult to connect it to prices, just like when we saw the drop in
oil
global oil prices, and Petron had to come and shout and say, come on guys, when the price was going up,
you were taking your price, now that's coming down.
Exactly. Yes. So it's funny how now the Naira has been stable for a bit. It's not in the best value. We would love for it to, maybe be under 1,000 or so, but at least it's stable. As you said, businesses can plan, but it's difficult to connect it to prices and to economic activities now.
Yeah, so that's where two things now comes into play. One, the confidence that investors have in the stability. Two is now again it takes some lag for business to adjust, for them to now begin to bring down price. So if they have high level of confidence, then they can now begin to adjust their price downward. But if the confidence is not strong, what you would naturally see is for them to say, we don't know what's going to happen, let's still hold on, because we might still go and buy our input, our raw material at high price. So that confidence is there. Then again, the other point that I gave, which involves...
Do you see a disruption to this stability with politics? Political funds flow, that one can be very hard. In Nigeria, I know we just finished Ekiti, but we're planning for the big one, and we expect a lot of push coming from that. Do you see that destabilizing what we have?
For me, I think I've said that the narratives have changed a bit. Of course, we're expecting the major campaign to start around August and September, and we have seen that traditionally around this time, even when they did primaries, you would have seen a lot of issues happening around the FX, but we never saw that. So the narratives for me have changed, and I don't think, even though we might see it, the CBN, because of their work that they are doing, they may not just watch the FX to begin to go down. So I think it's going to be relatively stable, with the margin between the official and the black market maybe not too large, because that's what the issues are.
All right, but I mean, we're still waiting this stability to turn to growth, especially at the micro level.
That's what everybody's saying. And that's why I said two things. It has to be stable for a number of time, so that it can begin to hit the ordinary man on the street. If it doesn't stay for so long, and there is a U-turn from this stability that we are seeing, then
are you trying to say we should continue with President Tinubu?
No.
Are you trying to say we stay on this path with the current
policy is about consistency. Whoever wins.
But we know in Nigeria, if there's a new captain,
and that's why
most likely things will change.
But that's why we are also now saying that whatever happens, that consistency of policy should be there. And that's what we are preaching at this point.
Dr. Patrick Ejemudi, Head of Research, Sterling Asset Management, thank you for your time.
Thank you so much for having me.
All right, let's take a break. When we come back, we'll head to the markets. Please stay with us. Welcome back to Watching Business Incorporated here on Channels Television now. And C4 Nigeria, a recovery. I don't know if it's too soon to rejoice, but we have a huge recovery, almost 1% at intraday at the NGX. Lost a lot of grounds, but green now, 0.91%. We have that in our pockets, hopefully to go beyond that at the close of trade. For Johannesburg, is 0.03% in the green, also 112,645.80. Let's go to other parts of Africa. Egypt is in the red. Intraday 0.17%, 52,591.47. Nairobi closed very, very, very positive on Friday. Look at it, 5.51%. That's a huge move for investors right there, 217.57. Let's move over to the Middle East. The Middle East, we see mostly green also. Dubai is green, 0.32%. Abu Dhabi is green, 0.19%. In other parts of the market, we see the reverse is the case. Tadawul and Qatar, both in the red at intraday. And in Asia, beg your pardon, America, in the United States, it's also green. Positive sentiment, of course, following the peace deal we're hoping to seal real soon between United States and Iran. Dow Jones 0.07, S&P 0.01, Nasdaq 0.24. In Asia, it's mixed. It closed mixed. The market is closed there. We saw Japan, Nikkei 225, that jumped 1.55% right there. It's a fresh record. These days, it seems that Nikkei is hitting new highs, at every trading session. When they will start taking profits, let's also remember that. Well, Kospi is also green. Hang Seng is on the flip side, 0.65% in the red. Shanghai and Nifty, however, are positive. So it's only Kospi that slipped at the close of trade. In the United States, of course, we saw that. But let's move to Europe now and see what's happening right there. See which side that they're on. We have Lars joining us. Hey, Lars, good afternoon. What's happening in the markets at this time?
Hi, Ine. It's good to be with you again. We are actually looking at a mixed picture today, with London up about 0.5%, Paris is down, and the DAX in Frankfurt hugging the flat line. The most interesting market, of course, today is London. That's because British Prime Minister Keir Starmer has just announced hours ago that he is stepping down, and he's likely going to be succeeded by a gentleman named Andy Burnham, who just won an important election there in the country just last week. Now, what is important to markets? Burnham is more left-wing than Starmer was, and that has a bit of an impact, or could have a bit of an impact. Analysts are expecting borrowing costs to rise in the UK on concerns that Burnham will reverse privatization and austerity measures. Meanwhile, markets are also obviously having an eye on the situation in Iran. You just mentioned, Ini, those peace talks ongoing in Switzerland. I don't know how hopeful we can be for now. We are mostly still seeing that same old uncertainty over the situation there.
Yeah, uncertainty it is, but it seems the uncertainty is reigning more with German farmers. I wonder why.
Yeah, German farmers indeed are finding themselves in the same situation as many others across Europe, including businesses and regular consumers. High gas prices have led to higher prices at the pump. And even this recent de-escalation that we have seen, it didn't really bring prices down significantly. However, we did, of course, in Germany have a little reprieve from the government, and we have discussed that previously, as we had a tax rebate scheme with lower taxes on gasoline and diesel for a while, and that gave us some savings. However, this tax rebate was said to be temporary. It is now running out, and more than anyone, the farmers are worried, because they are coming up their busiest time of the year. For the agricultural sector, of course, harvest season begins in July, and it runs then until mid-November. And once the harvest is actually brought in, work continues then with post-harvest soil cultivation, and with, of course, then later in the year, the fall sowing season.
So they feel that they're more affected than other sectors or other businesses?
Yes, in a way, and that is because their business is indeed very energy intensive. A combine harvester, the kind of machine that is most broadly used by farmers over the next half year, that can go through 1,000 liters of diesel per day. And if diesel is just 50 cents more expensive than it was, let's say, last year, and that is pretty much the price difference we have seen during the height of the crisis, then it means the farmers have to shell out an extra €500 per day and per harvest, of course, and that is a lot of money, and even more so, of course, in a business that doesn't have particularly broad profit margins. The agricultural business has also seen labor costs up. Many farmers are actually finding it harder these days to even find laborers to do all the manual labor in harvesting. So their costs has gone up tremendously, and higher energy costs now on top of all this is certainly an additional problem.
So do we hear any bird on the wall talking about perhaps they can get an extension of that tax rebate anywhere, anything like that?
Yeah, Indy, that is exactly what they want, but it is actually entirely unclear at this point whether or not they're going to get that. They were pretty smart now over the last couple of days, not only stating their position, but in an effort to get broader support for these demands, they have asked Berlin to just generally extend the tax rebate for everyone. However, that will most likely not happen, because economists have never liked the rebate in the first place. It cost the government, of course, a lot in tax revenue. It did not lead people people to even try to use less gas, meaning it did not force people or businesses to react to a changing market environment. Now, looking at farmers, of course, they can not just switch to using less diesel. So for them, a tax rebate might make sense, and I don't know, maybe they're going to get it. But on a broader scale, it will most certainly not happen. Whether or not farmers will actually see this kind of relief, I guess will likely depend on how the situation in the Strait of Hormuz will develop over the next couple of days or weeks.
Yeah, certainly a lot depends on that meeting, and we do hope we hear good news. Last, thank you so much.
Thank you, Ini.
Let's go to the crypto space now, and we see that there's been a sustained recovery for Bitcoin since the weekend. So in 24 hours, it's up about 1.41%. It's gone, I believe we had about 63,000 over the weekend, but now we have 65,330.6 for Ethereum has also recovered, but I'm sorry, still looking really poor. When it comes to Ethereum, 1,773.82 is up almost 2.5%. And a lot of greens is what we see. Doge, Ton, Cardano, and all. Is this recovery sustainable? I guess time will tell. Or, I mean, the meeting in Switzerland will tell. So let's see the stories making the rounds there. We see that apart from the resignation of the Prime Minister in the United Kingdom, there's also at the Bank of England setting out revised draft rules for sterling-denominated systemic stable coins. It seems a lot of countries are talking about stable coins now, regulating it, because we see more activities there, even by small businesses, even right here on our own continent. So the large stable coins used in mainstream payments rather than for crypto trading, the headline change is the removal of the holding limits that's proposed in November 2025 consultation. That's in the United Kingdom. A leading South Korean bank has stepped up its push into blockchain technology, and that underscores the country's growing commitment to digital innovation in the financial sector. Everybody is looking for how to move forward. Bank of Korea is also advancing its CBDC pilots with real-world testing. So CBDC is back in the news again. So, I mean, things are happening, and I'm glad Africa is not missing out. I can't say much about Nigeria, but that's it for the crypto space and on Business Incorporated today. Thank you so much for being a part of the program. It's just the beginning of the week. We still have a long journey to go. I'm Ini John McQuarrie. See you later.